Hi, everybody. Thanks for coming to my channel. Sure appreciate you being there. If you do like my channel and you do like the things I have to say, please like and subscribe to my channel. I sure appreciate it. It'll help me make a lot more of these videos out there. My goal is to help you as far as and help others out there just kind of understand basic terms and how mortgages work in short videos. So let's get started today. We're going to talk about how credit scores can affect your overall rate and also the type of programs that are available. So when you go out and get an actual mortgage out there, your lender's going to pull what they call a tri-merge credit report. And a tri-merge credit report is a blend of three different companies out there, their credit reports. That would be TransUnion, Experian, and Equifax. And when they do that, they're going to pull up what they call the Beacon score, the Fair Isaac score, and the FICO score. And then what the lender is going to do is they're going to use the middle score to determine what type of programs and what rate you're going to get. So in this case, what we have is a Beacon score here. Let's use two borrowers, for example. We have borrower one has 720, borrower two has 640. On the Fair Isaac score, 760, 730. And on the third score, we have 800 to 760. So the middle low score is going to be the 730. And that's what they're going to use to determine your rate in your program. Now, overall scores start at 350 and go all the way to 850. And once again, once you get above 760, you're pretty much eligible for the best rates that are available. Now, this isn't always the case. There are some special circumstances where this can change, but in about 95% of all loans, this is the way that it works. So let's look to see how it'll affect you on your actual rates and the programs that are available. The types of mortgages that are available out there we're going to use today is conventional, FHA, and VA. Conventional loans are credit score driven. That means the higher the credit score, the lower the rate, and vice versa. FHA and VA are government sponsored type of loans out there, and those are not so credit score driven. So let's take a look at these to kind of determine what there is. At a 620 credit score, a conventional based off of today's rates, but I just looked up, 7.625 with a 1% loan fee, making your payment at $2,017. That 1% loan fee costs you $2,850 to buy that rate to that rate. Now at 640, same rate, a little bit less in cost, same payment. 680, same rate, no cost, same payment. 720, rate goes down by 5/8 of a point, and your payment goes down by about $120. At 760, it drops another 1/8 of a point, so you're about 3/4 of a point from this point, and your payment drops about $140 from the 620 credit score. Now let's look at FHA and VA. The start rate 620 here, 6.875. So it's already 3/4 of a point lower than a conventional loan, and your payment's $1,905. VA, for those people that are eligible for VA, 7.25 with a $1,976 payment. 640, 6.49, making the payment $1,831, and here we're 6.5. So much lower. 680, now we're all the way down to 6.125. So a 1.5 point lower in rate, which makes the payment, when you look at that, $250 less than what it'd be on a conventional loan. And the same with VA. And look, and then go down a higher credit score now, since it's not as credit score driven, you can see the rate stays the same all the way up to 760 and above. Now, VA and FHA, what they'll also do is they'll allow you to go all the way down to 500 credit score. Now, if they do that, we're just going to look for today, we're going to look at the rates based off of 580. At 580, 6.75 is the rate. They do charge 2 points, but it's still almost a full point lower than what a conventional score is. Now, what this is signifying that it's really important for you to maximize your credit score. If you are looking about buying a house, have your lender pull your report up right to begin with before you even start looking. Have them review your credit report and see what things that you can do if you have a low credit score to improve that credit report, because it can be miles of difference in what your payment and what your overall payment and what you can afford can be. I hope that helps. I thought it'd be kind of good to kind of show you this information because I think most people don't have a clue about what lenders are looking at, and I thought it'd be good for us to go over this. Thanks again for watching my video and viewing my channel. I sure appreciate it. Please leave any comments you have, and please like and subscribe too, as I'll do a lot more of these going forward. Thanks again, and have a wonderful day. Bye now.